Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the Q2 and H1 FY26 post-earnings conference call of Brand Concepts Limited. Today on the call from the management team, we have with us Mr. Abhinav Kumar, CEO, Mr. Kalyan Maheshwari, President Accounts and Finance, and Mr. Manish Peshwani, Vice President Commercial. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended September 2025, the growth plan and vision for the coming years, post which we will open the floor for Q&A. Over to you, Abhinav.
Hi, very good afternoon, everyone. This is Abhinav this side, and thank you for joining our call today. I think this time we've given a summary of our performance highlights, and I'm sure everybody would have gone through it. But just to recap, so we're very happy to announce the highest ever top line and EBITDA in terms of our performance in this quarter. The revenue is up 26% year on year, and the EBITDA is up 33%. From the preceding quarter, I think we are plus 33% in terms of the revenue growth. We've seen a good growth happening all across our channels. The good part is that it has been fueled by all the channels. However, particularly mentioning our e-commerce marketplace operations, which I've always talked about, that we focus a lot on the marketplace because it gives us a better sort of handle. That business has surged by 63%, while the overall e-commerce is at a 23% growth. Large format also in this quarter has delivered a very good growth. It is also fueled by a lot of business development activities and point of sales expansion in large formats. Our margins, I think, are pretty much intact. In fact, they don't fully reflect the strong sales growth and gross intake margin expansion as we continue to invest in future growth and capacity building. However, we still have delivered the challenge is when you go for a high growth, you generally tend to compromise on certain margins. But I think I would give a lot of credit to the entire team that we've been able to grow while not letting go of our margins. So we've sort of kept our margins intact, and hence it is quite evident in the EBITDA figures. I've been saying for a company of our size, we've made a sizable investment in CapEx. In totality, we see we've made almost a 35 crore investment in the hard luggage as well as in the new warehouse facility. The new warehouse facility, both the investments at phase one. So we will continue to invest going forward as well. So this obviously will have its effect on higher depreciation and interest costs in the initial few quarters. But however, I'm very confident that in the future we'll see the true benefit of all these investments. We continue to expand in retail. We opened 5 new bagline stores this quarter. And all the locations that we've opened, Aerocity, Delhi, Oberoi Mall, Bombay, Mumbai Airport, Bangalore Airport, all these are very premium retail zones. So we are solidifying our position in all the premium retail places. Obviously, we internally, if I'll say, though, if I compare Aeropostale from last year to this year, we've grown pretty well. However, we had higher expectations from the brand, but it is still not opening up to its true potential. And we believe that in the times to come, we should be able to capitalize on that brand as well. External challenges, we tracked and we realized that in the past few years in our segment alone, more than 600 crores of capital infusion has happened. And hence, there are new age companies, there are legacy companies. Legacy companies obviously are obviously well leveraged, sitting on huge cash piles. The new age companies with a lot of fund infusion and raising of capital, they are also flush with funds, and we continuously see that they continue to burn aggressively, driving up talent costs, driving up EBO rentals, and all of that. So we continue to see that challenge. However, we have our own strategies to overcome those challenges. Um, um, and of course, investing into our own manufacturing is a step forward towards that strategy. You will see increased borrowing also. Obviously, it's towards funding of higher working capital requirements, and the capex towards the hard luggage plant and stores and warehouse and all of that. We in terms of business development, we stay focused on our strategy as a multi-brand licensing company. Our focus is on brand-wise positioning to maximize portfolio strength. We are segmenting the brands under various price propositions. So we want to get into the value segment also now, and the value segment would be aided through our own manufacturing setup, and it should. I'm very bullish. I'm very hopeful that that leverage also will start out to play in the years to come, while keeping our premium positioning intact. Tommy Hilfiger continues to show a very robust growth. Benetton has further grown this year, and we've solidified our position further by taking on Superdry, which we announced very recently. So Superdry is gonna announce our position in the premium segment. It's a very prestigious partnership for us, for Reliance as well as for us. For us also, it's the first brand that we're doing with Reliance, and I think for Reliance also, I think we are one of their first licensees that they have signed. So, as a partnership, both of us are very confident and looking forward to doing some meaningful business together. Yeah, with that, I conclude this thing, and I'd like to open the house for the Q&A.
Sure. Thanks, Abhinav. Rajiv, you can end the slide. All those who wish to ask a question may use the option of raise hand. In case you're unable to raise hand, you can put your question in the chat box and we'll invite you to ask the question.
For a change today, there are no questions.
So until the question queue assembles, Abhinav, can you throw a bit of light on what steps or actions did you take that saw us seeing such a huge improvement in the turnover growth? And in spite of that, you were able to maintain your margins. If you can throw some light on that thought process while people assemble for the queue.
Right. So essentially, from June itself, we had started changing our stance. So wherever price corrections were also required, we did that. And I had hoped that, so till about last year, we were also holding on to a lot of new product launches in it, because most of the products were again in the premium segment and taking the pricing higher. And while we were looking at that the market is going the other way around, we sort of held on to our new launches as well. So post June, we sort of decided to move ahead with certain newer models with price corrections, but at the same time, we also, we had the product pipeline ready. We started uh, we started launching the new products as well, and actually, much to our surprise, we saw that the two best-selling products that we had, one was our top-of-the-line product, that was also a bestseller, and our entry price point, that was also a bestseller. So gave us a lot of confidence of launching more products. So I think we've seen a lot of product launches in various brands this year, this quarter. Tommy alone, we've launched almost 4 to 5 new styles in the past 3 to 4 months. So I think all of that, plus a renewed focus towards e-commerce. Our e-commerce portfolio is strengthening. Our operations are strengthening. So I think all of this put together has helped us in terms of marketing. We've invested a lot in marketing. We continue to invest. So all of this put together, I think, has resulted into this kind of product.
Sure. We'll take the first question from Ishpreet. Ishpreet, you can go ahead.
Hi, Abhinav.
Hi, Steve.
So good comeback on the P&L side, but yes, a little bit of disappointment on the balance sheet end. So just trying to understand. So the new changes, like you just mentioned, that you've done for the brands to do well. Does this mean that this inventory and receivable is the sustainable one, or do you think it's a short-term thing and it should come back to normal?
No, I think working capital, as we keep on expanding in the newer brands, it would take a toll on the working capital for some time. And I've mentioned this in the past also, that hence our working capital requirements will continue to grow for a certain amount of time. Once the brands start stabilizing, that's when you start seeing these numbers.
Okay, so it's nothing related to maybe the slight sales mix or something.
No. It's not particularly related to sales mix change or anything of that sort. So the new brands, as I said, once you expand them, you will have debtors, you will have stock, you'll have all of that. So
Right.
yeah.
And generally it takes a year for the brands to, settle and start performing and showing.
I would say about 3 seasons. One season is about 6 months.
Right, 3
I would
seasons.
say
Okay.
3 seasons, and you'll start seeing things normalize.
Right. And are there plans to add any more new segments or new brands?
No, right now I would say that we are pretty much sorted now. Juicy Couture, we are, as I had mentioned earlier also, Juicy Couture, we are looking at amending our agreement, and hopefully we should be able to do that, as in we should be able to make an announcement pretty soon, where we are adding probably more categories because we've invested so much into the brand. We want to adopt the mother category as well. So that's something which is ongoing. But in the lieu of that, what we'll also do is, today our terms are of 15 years, which is a 10 plus 5. And hopefully now the term would be a 20 years. So it will be a 10 plus 10 year renewal. So we'll increase our tenure also. So apart from that, right now I don't see any major addition of brand today, because I think we're pretty sorted. I would want to now first consolidate and grow these brands. But yes, if there is a opportunity which is like a no-brainer, then probably we might consider. But at the moment, our outlook is that we don't want to increase more brands.
And Juicy Couture, if I see, like, I visited a few stores here and there while traveling or in Mumbai itself. So some of the stores don't have the Juicy Couture. In Mumbai also, I saw 1 or 2 stores where there was. So Is it like a stage-wise thing and maybe it will be restricted to a few places only, Juicy Couture?
You're talking about bagline stores, Shri?
Yeah, bagline stores.
Yeah. See, bagline stores currently, as I mentioned earlier, also we have a limitation of size, right? These are
Correct.
stores. So currently, Juicy Couture is available across, I think, 17 or 18 stores of bagline.
Okay.
No, 20 stores, around 20 stores of bagline. So we've not been able to launch it across all the bagline stores. So yes, you're right that it is a phase-wise approach. We also look at it from the point of view that if it is a city where the higher ASPs are doing well, that's where Juicy Couture fits in better.
Okay. And if you could also maybe mention how much of sales would it be now, Juicy Couture? Is it a meaningful number?
So I would say in the H1, we've done 5 crore sales in Juicy,
Okay. Okay.
which, if you ask me, given that we launched only in April, I think it's a very good figure.
Right. And sorry about the earlier discussion we had on the working capital. So these levels of working capital should stay another 12 months to 18 months till the brand picks up in sales.
Yeah, about at least 2 to 3 quarters at least.
Sure. Great. Thank you so much. I may come back in the queue.
Thank you, Ishri. We'll take next question from Yashovardhan. Yashovardhan, you may go ahead and ask the question.
Yeah, hi, Abhinav ji. Am I audible?
Yes. Hi, Yashovardhan.
Yeah, hi, Abhinav ji. How are you doing?
Good, Yashovardhan.
Yes. Okay. So it was very heartening to see the growth coming back after so long. So congratulations on that part. And we all know that the industry have been quite competitive. And even when the last time we interacted, you mentioned on that we have reduced our prices. I think that would be one of the reasons why the growth has come back. Is that assumption correct? Or how is the industry scenario in terms of, let's say, demand and then competition? If you could touch on that.
See, as I mentioned, Yashovardhan, that yes, we have corrected our pricing as well, right? But at the same time, I was mentioning that in our bestsellers list, the exit as well as the entry both were bestsellers, right? So that's what for us at least we've seen traction happening on both the ends. However, yes, pricing has also been one of the factors where the growth has come from.
Okay, okay. And so in terms of competition or the pricing from the competitors as well, since one of the industry leaders have been acquired, so I think they might be keen on making profitability better, right? So are we seeing prices in industry getting increased or to the base level as to what they were before? Or is the new pricing the new norm? Normal?
I would believe this pricing to be the new norm, Yashovardhan, because
Got it.
uh, today I think the large players are also not coming back on the pricing. So I understand one of the competitors has been bought on, but balance two competitors, the legacy players, are still very much in business, and I haven't seen price. Yes, there has been minor price corrections here and there, but the pricing has not come back to its what it was 2 years back. So those pricing levels, I don't think they're coming back.
Okay, sir, got it. And okay, so what so GST have been reduced, right? So are we seeing any benefit of that in terms of demand revival
In our this
or
thing,
increase in our pricing power? Any comments on that?
in our category, the GST remains the same, Yashodhan. So we were earlier also at all our categories were at 18%, and we continue to be at 18%.
Okay, got it. So,
But yes,
uh,
the GST impact overall on retail has been very positive. So from a
okay,
retail
so,
sentiment perspective, yes, the GST has left more money in the pocket of the common man.
okay. And so if you could share an industry number, that what would be the volume growth? Because even though the pricing has been corrected, but there must be volume growth, right? So any number that we must be tracking, and what would be that number for us as well?
Yeah. So, see, in terms of volume growth, so before that, also, I would like to actually mention that, the results that you see are obviously consolidated figures, which include our retail as well as the manufacturing division, right? And
Mhm.
if I look at the retail alone, I think from a growth perspective, we've done much better in growth. So if I talk about retail alone, our retail division, we've grown by 33% year on year. From last quarter to this quarter, there is a 33% growth. And if I look at H1, our overall growth is at a 15%, right? So from that perspective, uh, from a retail perspective, yes, our growth has been good. The volume growth over here would be, say, depends on category to category, but I would say that it will remain in a similar percentage. Probably in certain categories, it might be a couple of percentage points higher, where you've had some price corrections. And in certain categories where the pricing has been flattish, it'll remain that. So I would still say that our value growth is sort of corresponding to the volume growth.
Okay, so got it. And sir, in terms of overall portfolio, if I look at, I think overall in the industry, the growth is coming from the lower price end, right? There, it is the place where the competition is in there. And if I look at our portfolio, we do have Tommy, which is the major brand for us. But apart from that, the new brands that we have signed as well are probably in the same tier, few notches above. So, what is the strategy? Because if I'm looking at a consumer behavior, I doubt whether they do have a, let's say, aspire or loyalty towards a brand, right? So, still, pricing is one of the factors which is moving the sales. And in that kind of market, we are launching the brands which are actually more expensive than what we have currently. So some color on the strategy and how do we look at this?
See, as I mentioned earlier, we are a multi-brand portfolio company. So with Aeropostale, with UCB, and of course our own brand vertical. That's where we want to play uh, the value and the masstige sort of segment, which is mass and mass premium. That segment is what we want to play. We've still not been able to make any dent in the mass segment, right? So if I talk about, for example, you said, the growth is coming from the lower segment. Now, if I quote my figures, Tommy Hilfiger for the quarter, we've seen a 39% growth. This again, I'm talking only retail numbers, right? I'm not talking about the consolidated figure. So if I talk about the retail figure, we've grown by 39%. UCB has grown by 30%, whereas Aeropostale, we've actually seen a dip, in this quarter. Um, and that's the reason I've mentioned in our internal challenges that while H1 Aeropostale is still there is a growth, but the overall figure is way too small. Even in H1, if I look at, even if you don't consider this quarter, if we look at overall H1, Tommy still has grown at more than 15%, right? And Benetton has grown by almost 6%. So if you see, premium also continues to grow. I'm not saying that, while there is competition, while there is this thing, but with the rising aspirational income and everything, I think it will be wrong to say that premium today is not growing or can't grow. Uh, yes, the growth at the mass segment is higher. we've not been able to capitalize on that, which we are, trust me when I say that we are very, very focused and we are trying to capitalize on that. So hopefully, you will start seeing those results also in the next couple of quarters. We have our strategies in place. Let's see. I'm very hopeful that we'll be able to make a dent over there as well.
Okay. And so coming on to the slide number 6 of the presentation, where you have mentioned the internal challenges, it is mentioned that signing with a large e-commerce group, there was some, let's say, impact and or the anticipation of spillover impact has to be fully materialized. Can you please elaborate on that? What is that? And what are the arrangements with which site are we not currently present on? Or what are we anticipating?
This is on using internal challenges, is it?
True, sir.
While the signing with a large e-commerce group for overall brand, this one is what you're talking about, right? This point.
Correct, correct.
Essentially, as I said, Aeropostale was a bet for us, and that bet was also coupled from the fact that Aeropostale is signed with Myntra, okay, for the mother brand, and
Mhm.
hence we were very, very hopeful because we are very close partners with Myntra. So we were very hopeful that once the mother brand is signed with a close partner of ours and it's a large e-commerce group, they're gonna take for the overall brand. I think it's gonna be a good, and we benefit from that. So you always have to understand in licensing, we are the licensee category, right? We are not the mother category. So we get a lot of rub off from the mother category. So if the mother brand is doing very well, if the mother category is doing very well, we naturally get benefited out of it, right? So now with a giant like Flipkart, Myntra signing Aeropostale, we were very hopeful that we will also get benefited. We've not been able to capitalize on that. However, as I said, we are in process, and hopefully, in the next couple of quarters, we should be able to work this out.
Okay, so thank you. I do have few questions, but I will come back in here.
Sure.
Thank you.
Thank you. We'll take the next question from the chat. From Ashwini Agrawal. Just wanted to know, how do you see Superdry and Off-White as a brand, like you used to categorize brand as major and minor brands? Also, you had said earlier about brands positioning, like Juicy Couture fit perfectly for premium women handbags category. So in this positioning terms, how do you see Off-White and Superdry?
Okay. So Off-White is luxury, is pure play luxury play, and I would so if I have to categorize it in terms of major brand and this one, I would say that it's not a major brand from a turnover perspective. From a prestige perspective, from all the other perspectives, obviously Off-White opens a lot of doors for us, right? Internationally as well as domestically. But from a turnover perspective, it's a luxury brand. I don't foresee that in the next 5 years it can be a 300-500 crore retail brand. But so from that perspective, it'll have its restricted this thing. In totality, we have plans of 4 to 5 stores. So it's a niche category, niche experiment. But strategically, I think it is a very, very important brand for us. Extremely important brand. And I think, in the years to come, I think everybody will start understanding the strategic relevance of having such kind of a brand in your portfolio. With Superdry, I think it's in that premium pricing proposition, and I think it's a beautiful brand. I love the brand. The design philosophy of the brand, it caters to a much younger audience. So in a way, it's very different from Tommy Hilfiger. Tommy Hilfiger is a little more elevated, a little more classic in terms of its designing, whereas a Superdry is a very young sort of design sensibility. And considering India is a very young country overall, I think it's going to be and it is one of the largest brands in Reliance's portfolio, right? So they also showing confidence in giving us their single largest brand as a licensing partner. I think it speaks volumes for whatever credibility that we've been able to create for us, right? So we're very, very humbled, we're very excited about this brand, and this I definitely see a heavyweight brand in our portfolio.
Thank you. We'll take the next question from Samyak Shah. Samyak, you can unmute yourself.
Hi, am I audible?
I can, yes, yeah.
Hi, thanks for the opportunity. So my first question would be, what would be the like-for-like growth in this quarter?
This quarter like-to-like growth is, hang on. So like-to-like growth, actually we compare only and only in EBO and large format where we have a direct control and access on. So over there also, if you'll see, we've grown in small leather goods and travel gear. Put together, if I see, I think we've grown by almost 6.5% in like-to-like. Overall retail sales, if you look at, and this I'm not talking only quarter, this I'm talking H1. You know, it's a little distinct to calculate a quarter because of different periods. So, hamara quarter starts from a particular date to a particular date. Generally, in retail, we don't necessarily look at from that perspective because Diwali किसी सीजन आगे चली गई, दिवाली कभी पीछे चली गई. सो दुर्गा पूजा दिवाली के सेम डेट्स को हम पिछले साल से कंपेयर करके वो पीरियड देखते हैं. Otherwise, it is always healthy to look at a longer, at least a H1, right? So H1 अगर मैं देखूं तो we've grown by 6.5% like to like, whereas my overall growth for H1 is an 18% in these channels.
Okay, thanks. And then next question would be, what would be the split between trolleys and handbags? If you can just give me some numbers just to get a sense of how the segments have performed. And also, how do we see both of these categories moving forward?
So for the quarter, if I see, travel gear is approximately 54% of our overall this thing, in which only the luggage, if I talk about, which is trolleys, is about 35% of our overall sales. Small leather goods continue to contribute to about 42%, and the balance is women handbags.
Okay, thanks.
Thank you. We'll take the next question from Ronit Kapoor. Ronit, you can go ahead.
Yeah, hi, am I audible?
Yeah, hi Ranit.
Yeah, hi. Congratulations on the strong revenue growth.
Thank
So
you.
I have a few questions. One of your associate company, I noticed, 7E Wellness is not being
Right.
consolidated due to cumulative loss. So can you specify what business is there in that associate?
So, Serenity Wellness is a joint venture with a US firm by the name Serenity Wellness. And it's into the beauty segment, really. We deal in technology-based facial equipment, so it's a microcurrent facial, this thing which we've launched in India. So where the JV partner is the US company is a 51% and we are a 49% at present. Now, that company also, I would, in fact, very, very actually happy and proud that we've been at it for quite some time. It's a different team, it's a different setup. and that team also has been working very, very hard. And very recently, now we are starting to see the results even in that company. So we've actually partnered with one of the most prestigious salons in the country with her machine and the entire facial this thing. So it helps in basically anti-aging. It's a non-invasive anti-aging treatment, which I personally foresee that it has a great potential in India.
So in terms of like revenue, like currently generating, I think very minuscule revenue, right?
Yeah, very, very minuscule revenue. We're probably at a run rate of about 10-15 lakh rupees a month.
Okay. And one more thing was you have a related party entity, I think, industrial fabrics, where you're supplying some annual rent or some rent and power expenses, which close to a crore a year. So could you just specify the nature of the transaction? Like it's some office rent or like what?
IFF overseas or
This is merged with the PC now. So
No, no, not that one. Industrial filters and fabrics.
filter की building में है ना.
Okay. Yeah, so yeah, industrial filters is a related is another entity. Now the building where IFF Overseas essentially runs or the manufacturing runs, that office building belongs to another entity, and hence there is a rental being given to that entity.
Okay. And one more thing was now, so like even IFF Overseas is merged, which is into soft manufacturing. So any plans to move into luxury handbag manufacturing, like for contract manufacturing? Like?
Very good question, actually, Ravi. I personally foresee a huge potential, a huge upside to handbag manufacturing, but sooner or later I will get into it. Not today. Not today. We'll wait, but I want to get into it.
Not in the next couple of years or such like.
Yes, probably 2 years down the line, 1.5, 2 years down the line. Once right now we've already made a lot of investments. Now I think it's important that now we sort of we have fuel, we have a lot of buckets which we can take on. We have a path which is already set. So I will first achieve that, get to that level, and then look at further opportunity areas. And in those opportunity areas, handbag manufacturing, I think, is a very, very key item for us.
Okay. And last question is, could you specify like what was the revenue and EBITDA margin are you expecting for the year?
I think it'll be wrong to exactly say that, but I would still say that yes, internally we are targeting for at least 20% sort of a growth in terms of revenue for the entire year.
And margins would be like 11% plus, or like now this like current quarter levels, or they should improve.
यार मैंने पहले भी 10% ही बोला था. Delivered more than 11, delivered 12. I would say that I will remain in 10 to 11.
And when would the deleveraging exercise begin? Like any more debt you plan to take on, or like that's like there is a peak debt like.
Yeah, no. Further debt expansion, I don't think we are right now looking at it. Further, if we would need, we will probably need more working capital. And if we need, now will be funded through a capital raise or equity whenever it is required.
Okay. And I think lastly there was a preferential allotment was done in October. So could you specify what is the reason for that, like for deleveraging or for growth? Like?
That's essentially it was warrants which were issued to the promoter category. It is also to raise funds internally, and so it was done for 20 crores. And again, the reason for that is to improve our leverage on the working capital.
Okay, thank you. That's it from my side. All the best for the future.
Thanks.
Thank you. We'll take the follow-up question from Samyak Shah. Samyak, you can go ahead.
Hi, thanks for the opportunity again. I wanted to know the mix, the split between value and volume growth for the quarter.
Manish, can you give me the volume growth for the quarter?
49%. 49%.
This is retail, right? So the volume growth is about 49% for the quarter, whereas the value growth is about 33% for the quarter.
Category mix.
And that's owing to the category mix also.
I'm sorry, this is for the entire company level, right?
Primarily retail level, because see, out of the 97 odd crores that we posted, there is a 3.5 crores of the manufacturing division, which is IFF Overseas, which is now merged. And that 3.5 crores is outside of brand concept. So the other brands that we do manufacturing for, that has added a 3.5 crore rupees of top line. So all the analysis that we do, like to like, growth, degrowth, all of that, we do on a retail division. So I'm talking about a 94 crore base on which I'm talking about. So last quarter, brand concepts retail division, we did 70 crores. This quarter, retail division, we've done 94 crores. So from 70 to 94, I'm giving you the mix of this 33% growth. I'm giving you the mix of volume and value for this 94 crores.
Okay. And secondly, on the 35 crore capex that we are doing in trolleys, are we on track as per the timeline that we have given?
I think we are ahead of schedule over there, Samik. I'm very happy to share that we are ahead of schedule. We've already started reaching 20,000 plus units a month, whereas I had mentioned that the optimum capacity would be about 25,000, which we will take at least 10 to 12 months to reach there. And we commenced operations in July, and last month we crossed 20,000 pieces of production.
Okay, that's great to hear. Thanks.
Yeah.
Thank you. We'll take another follow-up question from Yashovardhan. Yashovardhan, please go ahead.
Yeah, hi. Thanks for the opportunity again. So since we are adding so many bands, just wanted to know that what would be a dead stock? We must be tracking that number, right?
Yeah, but we don't have any dead stock. Shobhadan. It's a constant process where if there is a old season merchandise, we discount, and when we sell it in different channels, and then there are certain defects and all of that which come, or customer usage pieces which come back to us if that's a dead inventory. But generally, those are all at a very, very acceptable levels, less than 1% of our sales. So, and it's a constant journey. So that way, there's no dead stock lying in our
Okay, so
shopper in our.
yeah. So the rationale for asking that question was to know that our capital is not getting stuck in that. So that's pretty much clear. And so in terms of seasonality, Q3 is the best quarter for us, right?
Not necessarily. It again depends. As I said, Q2 and Q3, it also depends on Diwali. So, for example, Durga Puja, Diwali this year, both of them were in Q2. Otherwise, generally, क्या होता था कि नहीं, sorry, supplies happened in Q2. Retail is now happening in Q3. You're right. Yes. So, from a retail perspective, yes, Q3 is one of the best quarters.
Okay. And so do we track the number that from what part of, so let's say geography-wise sales, that probably north or west would be, let's say, the best performing market for us, and in terms of growth, we must be targeting the new geographies. Do we track that? And if yes, so what would be the number, and how are we trying to grow? What would be a strategy, the next leg of growth for us?
In fact, for us, North has been a little subdued because of the overall Punjab region. So both Q1 and Q2 Punjab region has been a little disturbed initially with the war and everything that happened. That had an effect. Then the whole Canada and that situation which happened. So Punjab continues to be a little subdued. Rest, I would say that our mix is overall pretty healthy, and right from West, which has shown very good growth. So including West, North, South is rising. However, I would still say that we are very underpenetrated yet in South. So we're focusing a lot on South. But yeah, we are overall, we have a very healthy mix.
Okay, sir, got it. And okay, so what is the strategy in terms of opening the stores? Because earlier as well, you had mentioned that we must be opening some stores for JC exclusive and for Tommy as well. And since we are having so many brands now, the stores that we must be adding even in Bagline, those stores must be bigger than what they used to be in order to incorporate all the brands. So,
Yes, we experimented with a bigger format of store and a new identity in Raipur, and that's almost a 1,200 square feet, 1,000 to 1,200 square feet kind of a store. Whereas earlier we used to open 300, 400, 500 square feet of stores. So now we're looking at 1,000 plus kind of a size so that we are able to incorporate more brands over there. But we are, from a store opening perspective, I think we are focused more on malls and from a geographical point of view, if you ask me, our focus would be right now to penetrate deeper into the tier one. We still have very few stores over there. Like for example, I would believe that the entire Delhi NCR region can take at least 5 to 6 more stores. We can open at least 5 to 8 stores over there. Bombay alone, we could open. There are these cities are so big and so vast that I think another 3, 4 stores in Bombay would can easily be accommodated. So the focus is on the tier one penetrating more, increasing the density of stores over there. And then at the same time, if there is a new premium mall coming up in a tier two, tier three city, we would love to be a part of that destination mall.
got it, sir. And what would be the mix of Coco and Foco stores?
Currently, it's almost 50-50. 50% are Coco and 50% is going to be Coco.
Okay, so and so last question from my side would be the after all these initiatives that we are taking, what is the growth that we are emphasizing for next few years?
Yeah, I would say that internally we would be eyeing at anywhere between a 20 to 25% CAGR over the next 3 years.
Okay, so got it. So thank you so much and best wishes.
Thanks.
Thank you. Any participants who wish to ask the question may use the option of raise hand.
There's one follow-up question from Ashwini Agarwal in the chat. Yeah, the focus right now will be on stabilizing and scaling the newly acquired brands, or are we still actively looking to get more brands on board?
I think I already answered this. The focus is going to be scaling and stabilizing the brands which we already have taken.
Sure. Since there are no further questions, Abhinav, would you like to give any closing comments?
No, I think we've covered everything pretty much, and I think Vinay, the summary slide has really really sort of helped, right? Where we've tried to answer most of the queries in our summary performance highlights itself. And this is something that we will try and continue to do going forward also in our results, where as a company we live by the standard of transparency and everything, and hence all of this is a step forward towards that, where we make all our investors aware about what exactly the company is doing. So just signing off by saying that I think we've changed our orbit from now on, and hopefully we continue this going forward. We have a lot of levers which we can work upon. We are working upon. कोई भी perfect नहीं होता, और जहाँ पे scope of improvement होती है वही मजा भी आता है, and scope of improvement I think is always there. So I believe that we have a lot of levers. So if the markets become supportive, we'll grow more than our peers. Even if the markets are not very supportive, I think we still have a lot of levers on which we are working, where we should be able to continue a robust growth. So the focus is now on putting the pedal on this growth, and hopefully with everybody's support and with my team's hard work, we should be able to deliver.
Right, Abhinav. Thanks a lot. And thanks to all the participants for joining on this call. This brings us to the end of today's conference call. Thank you.
Thank you. Thank you everyone for joining.